What's going on, everyone? We're going to do a little technical analysis on the triple Qs, which is the NASDAQ 100. It's the stocks and the ETF that I love to trade so much. So if we kind of just dive into the daily chart here, I'm going to kind of go left a little bit, right? So if we kind of look at these recent highs that we had here on the NASDAQ, going back to the beginning of February, you can see we had a high price of around $313, followed by, what seemed like forever, but it was about a 2-3 week period of distribution where stocks were really stuck in a tight channel. And if you were trading 2 or 3 weeks ago, you kind of understood that you couldn't really set your feet to the north side or to the south side. At one point we were just wishing, let's just either break down or let's break out to the top side. Let's get out of this sideways chop. That's exactly what kind of happened here, going back to March the 2nd. Now, if you guys can kind of remember March the 2nd, right? If you remember that day, that was the Bostic day, where one of the Fed members, Mr. Bostic, came out and said something that the market liked, right? That the market reacted strongly to what Bostic said, and this is a very, very good engulfing green candle that we had here. But the level that I want to point out here was the 200-day moving average. Okay, so why this was so critical here at this point in time here at around that March the 2nd was because not only did we break below the 200-day moving average, at one point in time we were stepping stones away from tagging this 50-day moving average, which was sitting at $286. Now, if you guys understand technical analysis and supply and demand, you understand that the 200, the 50-day, the 20-day moving averages are very, very significant when it comes to technical analysis and trends, right? So essentially, we've been trading over this 200-day moving average for quite some time. We've been over the 50-day moving average pretty much essentially from the beginning of the year, right? So if you kind of look at where we came down to, we got this nice 2-day, 3-day kind of bounce here, a little bit of relief back into the 20-day moving average, which at this point in time, a lot of the bulls started to get excited and felt that this was a very healthy and much needed back test, which I did agree so myself. This was a needed back test that we had here into the 200-day moving average, followed by this aggressive reversal. Now, if we go back to 3 days ago here, we had an inverted hammer. And if you know anything about candlesticks, you know that an inverted hammer normally means short-term change in trend, okay? Normally, right? Now, it's not going to be 100% accurate all the time, but normally an inverted hammer means we're going down. Normally, a hammer candle means that we're going to continue the move to the upside. Now, this sell-off here, kind of a little bit of a blow-off top here. The next trading day, which was yesterday, we again, thank God that, Jay Powell is done with this 2-day kind of rant and testimony that he's been doing. I felt like every which way, every word that he would say, the market's going up, down, up, down, up, down, up, down, right? It provided some opportunities. But again, let's just get back to a normal, boring old market, right? That's what we want. We want normal. We want boring. We don't want, high volatility. So if we kind of look at what was going on here, a little bit of a blow off top here. Now, if you're a bear or if you're a little bit concerned of going to the long side, yesterday we had quite the selling pressure that came not only all the way down here and broke below the channel, but also closed right below this 5-day moving average. Now, the only reason I can say that this could be a little bit of a trap here is because if you kind of look, we had the initial sell-off here into the 200-day moving average, followed by the bounce, right? Now, this is the Bostic bounce here. We can call it a dead cat bounce. We can call it whatever we want to call it. We had a 3-day bounce. Now, if you are keen into technical analysis, if we have this bounce, get rejected, which we did here 2 days ago, fail to break a previous high point and start to come down and not only backtest this 200-day moving average again, if we start to close below the 200-day moving average, you can see that the 50-day moving average is sitting at around $288. Any close below the 200 or below the 200 and the 50-day moving average would essentially send us down to 283, and you're going to see a ton of stocks start to expand to the downside, which a lot of stocks have been getting pulled drastically. If you just take a look at Tesla, amongst some of the names out there, some of these stocks did get pulled. And if you can kind of see here, any close below the 50-day moving average is got a lot of room down for potentially the last leg, right? Maybe we see new lows that we haven't seen since going back to 2022. However, if you came into the market ready to just short, thinking that if we lost yesterday's lows and got below this 10-day moving average, that potentially we're coming down here to 292, we didn't get that. So that a little bit is concerning for some of the short-term bears, because did they potentially get trapped? Because if sellers potentially just got trapped at this 10-day moving average, if you kind of look at this aggressive red candle that we had yesterday, this is a very aggressive red candle that came and closed right at or below this 5-day moving average. You can look at this blue line here on my screen that I'm dragging my cursor across of. This is a 10-day moving average. Now, the reason why I say sellers are going to be very excited and potentially trapped here is because if you came in with a strong bias, or you came in expecting that if we lost this, we are going to come back down and retest this 200-day moving average, which almost here looked like we were going to come down to the 50 and not, come down to 285, 280, right? Now, if you were waiting for this move, we got the move where we not only broke yesterday's price action lows, but we also started to get below this 10-day moving average. You can see here, we got below this 10-day moving average. So as we got below this 10-day moving average, we did not stay there long, and we did not build below the 10-day moving average intraday today. Not only did we not build below the 10-day moving average intraday, but we started to get bought back up very aggressively at certain parts of the day, depending on the certain stocks that you may have been trading. If you were just watching the overall triple Qs ETF, really towards that later half of the day, we started to get bought up, especially going into the close. Now, if you look at today's candle pattern, close is a hammer candle. So are we getting ready to break out to the top side? Because if that's true, then we did just essentially trap sellers here. All we need to do is get right over today's highs, which is clearing out this 20 SMA, and we have room potentially back up to 303. Anything above 303 could potentially take us all on another leg higher. So that's why this week was very, very critical. Where did we stand? Were we going to, have this little bit of a dead cat rally bounce here, this Bostic bounce that we had off the 200-day moving average, get rejected? I'm not going to lie. This day here, this candle close, I was expecting boom, 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 right? Is it entirely possible that tomorrow we do take out this level of around 294.80s and come down to 292 as well as 290? 100%. However, we have to be open to both sides. If the trade comes where we do lose today's lows, we do have a short potential. So whether you trade the index or whether you trade stocks that are associated with the NASDAQ 100, all you need to focus on for tomorrow is this low. As soon as we start to lose this low, like let's say for example we pop off the open, we have a gap green open, and then we start to get rejected, we never really take out today's highs, or maybe we take out today's highs and it's kind of a blow off top with a long wick coming down, and we lose today's lows, that's when you're going to want to short your favorite tech stock through their day's lows, as long as they have expansion channels below to the next demand zone. Or if you would simply like to just trade the triple Qs, anything below 295 has room down to 292. That's going to be a very expanded channel where you can make some good money on that trade. So if that doesn't happen, let's say for example we open up red, or we open up gapping down. Now if we gap down, I am not going to be very excited or antsy to try to short this into the hole, because we do have rising support that is coming up. We've got the rising 50-day moving average, which potentially maybe 2, 3, 4 days, even a week, is looking to potentially cross over this 200-day moving average. And that's going to be a bullish sign, because it's going to act as rising support to go and make a new leg higher. So if we open up flat, or we open up red, or if we open up underneath today's highs, what we really want to see is the bulls continue to trap these sellers and push through this 20-day moving average. Now, anything over the 298.57 does have initial room to around 300, and over 300, we've got room into around 301. Anything intraday over 301 can really stretch and get into 303. Depending on where we close this week, if we do close back over all of the short-term moving averages, which is the 5, the 10, and the 20-day moving averages, next week, I would have full confidence to start putting more risk back on the table for some of these overnight long plays. As long as we can stay over today's low and over these short-term moving averages. Now, what happens if we have an aggressive gap up tomorrow? If we have an aggressive gap up tomorrow, something over 300, maybe even 301, I would not go long into the sky, because the last thing you want to do is buy the top of a blow off that is going to essentially come back down and lose today's lows, and you're going to be looking at your trade be down $2, $3, $4, $5 at the end of the day. So what we want to do is, if we gap higher tomorrow, or we have an aggressive rally right off of the open tomorrow, like let's say, for example, we're pretty much trading flat, maybe up or down, you know, a cup of coffee in the morning, and as soon as the bell rings, that first 5-10 minute candle is just shooting aggressively higher and higher. What we're going to then want to do then is at least wait the first 30 minutes of the market open. Let's allow that first hour candle to close. And if we can confirm that new high that we put in off the open into the second, third hour of the day, that's essentially where we're going to want to go long with that 302, 304, 305 price target. That is essentially what we would be looking for. Now, your measured move potential would be the upper Bollinger Band at around 308. Do we get there this week? Maybe, maybe not, right? If we fall short of it, it's okay. It doesn't mean anything wrong, but that's our just measured potential. That's like, you know, in a best case scenario, we get to 308 this week, right? For the bulls. In a best case scenario for the bears, we get down to around 291, 292 in a best case scenario. And obviously anything better than that is just absolute home run. So that's how we're going to kind of set it up and play it. So be careful if you are holding short positions tomorrow. If you are holding short positions tomorrow and we open up red or we gap down, please just take profits right off the open. The last thing you want to do is think, aha, I got the bulls in the bag, I just won this trade, the bulls are stupid, I held my short trade overnight and I'm banking. 30 minutes later, that trade reverses on you, you lose all those profits, and now you, sir or ma'am, look like the idiot. So with that being said, please be patient tomorrow. Please have a trade plan. Please understand what you want to do before you do it. Don't just get in long because stocks are going higher. Don't just short because stocks are going lower. Understand your levels. Again, very, very quickly. Flat open, green open, gap open. What we want to do is wait to see if we confirm those highs within 1 to 2 hours. If we do not, and we roll back over through today's lows, we want to take those short positions. If we open up flat, red, or gap down, we do not want to short into the hole. What we want to see happen within the first 30 minutes to an hour is see, do the bulls have enough steam to kind of trap those sellers like they did today? If they can continue to trap those sellers and run some stops, you could see everything kind of drop down and then go red to green. And obviously, based on technical analysis, anything over today's highs of around 299 over this 20-day moving average can absolutely explode, and you want to be on the long side of those moves. I hope this video helped you guys. If you guys want to learn how to trade technical analysis, make sure to join evolutiontraders.com. You go get access to the online community where we do live trading each and every single day, 2 video courses. You can ask me questions, you can get some one-on-one coaching, and we can go over a perfect strategy for you based on any account size. Whether you have a small account, whether you're looking to get capital for a large account, I can help you guys get funded with some of these various different prop firms, whether you guys would like to trade equities, stocks, crypto, Forex, or futures, right? So with that being said, I'll see you guys on the next video.